Good afternoon, everybody. How was the sound out there starting to the second at 6 o'clock? 5 by 5 says Glenn. Hey, Harold, Jeff, Doug, Mark. Hi, everyone. Sounds good? All right. Let's begin. Welcome to tonight. For those of you who are brand new, I do these events typically like every third week. And then we also have the bi-weekly scanning sessions every other Monday. So the way the schedule has been working on every other week we have an event Monday and Wednesday, and then on the opposite weeks we have just Monday or just Wednesday. So that's the way it's been. Kind of sometimes the holidays interrupt that, but that's kind of what it's been. And for those of you not aware, the recorded events, this event, the Wednesday night educational sessions, as well as when I do the coffee at DTS, and also a series of educational Trade of the Week videos, are all recorded and put on the Free Stuff page. Hopefully you can all find that if you go to the DTS homepage. Shouldn't be too hard to do. Let's get going for tonight because we do have a lot to go over here. I sent out a special email. Sometimes I will tell you I don't think this is one of my best, and sometimes I tell you I think it's really good. Sometimes they're good but boring. Sometimes they're good but fun. Sometimes they're whatever. I've done an awful lot of these at this point, and I never seem to have trouble finding new topics. I don't know how that is exactly. There seems to be no end to the things you can talk about in terms of peripheral topics, and I consider this one to be a must listen to even for the DTS seminar students. Patience is the topic, and as I went through this, I started to realize, I've been having this one brewing in my mind for a little bit, because I more and more realize as I talk to people, work with people, help people, that a lot of the underlying problem is this topic tonight. And as I think about it myself, my own trading, because I'm riddled with all the same issues that any of you are, whether you're brand new or losing or making money. It's just a matter of how I've learned to deal with them or how I handle them. And I realize this really is a big topic, and it often gets disguised for some various reasons. So I think tonight is going to be one of the most helpful sessions that you've had. I think they're all pretty helpful, but this one should be especially good. There's going to be 2 trade examples that we go through. So let us begin, and I'm not going to stop on this introductory slide that's been on the emails, so you can read that if you want to, but we're going to cover all of that. An opening comment. If the conclusion of this presentation was to simply say that you should wait longer on every trade, we could be done right now, right? I would just say, hey, wait longer on every trade. This topic, like many in trading, is not quite that simple. And like many topics, it requires a combination of technical expertise as well as psychological mastery. Boy, those are some big fancy words, isn't it? So let's start with the definition here. The topic of tonight was patience, right? So let's start with the basic definition of patience. Now this is from the internet. I put Webster. I always, I don't know if it was Webster per se, but it was one of the definitions from the internet. They're all pretty similar. And according to that, patience is the person's ability to wait something out or endure something tedious without getting riled up. I'm not even sure I love that definition for real life, but for trading, I do want to maybe change the wording a little bit, because I don't picture anybody getting riled up at their computer waiting for a trade, because in this case, we're kind of anxious, right? It's more of an anxiousness. So I want to see if we can all agree on this. How about this? Instead of the definition down here from Webster's, which I don't think is perfect for trading, how about this? Patience for trading is a trader's ability to determine when waiting for more information is warranted without an unjust fear of missing out. How does that sound, everybody? Not a trick question. That really is my best effort to make a definition for patience. How does that sound? Only Marty liked it? Out of all you people here, only Marty liked it? Way better? Okay, good. Because it's kind of important, because we're going to kind of build on the definition. And believe me, don't worry. This is going to get into some really good stuff. If you think this is starting off boring, don't worry. You have to lay the foundation. Okay? So here's that definition. There are a lot of key words in here, right? Ability to determine, that's key, right? Not everybody has that ability when you should wait. For more information, when it's warranted to wait for it, and without an unjust fear. We're going to find out that word unjust to me is incredibly important, but we'll cover that in some upcoming slides. It's not the waiting, but rather the knowing when to wait that is the technical part. As I went through this, it's funny, you start dissecting this, you go, wow, this is kind of cool, but think about it a minute, right? It's knowing when to wait that is the technical part, right? I mean, you think waiting in general is all psychological, how can I wait? But it's knowing when to wait is technical, right? It has nothing to do with psychology. It's simply saying, here's a chart, here's a chart, here's a chart. When should you wait? When should you act quick? What's the difference? Do you know? So knowing when to wait is the technical part of this issue. And knowing when to wait is not always all that easy. It always requires an in-depth understanding of the chart. You don't always know when you should wait or when the odds are better to wait. You never know for sure, right? There's nothing in trading that we ever know for sure, right? I don't know for sure the market's going to drop tomorrow. I don't know for sure the best trade I've ever seen in my life will actually go up or down like I think it will. All I know is that different things have different odds based on my interpretation of the chart and everything that I look at in taking the trade, long-term, short-term. It's all about weighing the odds. So let's weigh the odds on a trade. This is from yesterday. I'm going to ask you guys some questions, and we're going to take a technical look at this, knowing when to wait, right? Not the ability to wait. That's maybe a little different. Maybe that's a little more psychological. But they're interrelated, like a lot of things in trading are. If you don't know when you're supposed to wait, you will never be able to wait. Isn't that correct? If you don't know the difference of when you should wait or when you shouldn't wait on a chart based on your best interpretation, you'd never have the ability psychologically to wait. Is that true? Is that true? If you don't even know when you should wait, it makes it impossible to actually wait, right? Because why would you wait? You assume every trade is what you want to do. You better get in or you're going to miss it. Let's act right now, right? So I want you to take a good look at this because I want you to really think about this trade a little bit. And it was just yesterday, so this isn't going back to 1947 archives or something. Here's a daily chart of this stock, and this is DVN. DVN, I believe that's an oil stock of some kind or energy. This daily chart does not include the day of the trade. So this is what it looked like before the day of the trade. And this is going to happen first thing in the morning. So here's the 5-minute chart of DVN, and we're going to open right there. So immediately when I see a stock that I have some interest in, decisions have to be made. And one of the first decisions is, well, when am I interested in taking a trade on this? And this is going to be a short for me, didn't consider it long. So one of the first questions you have to ask is when you're a day trader sitting there at the open is, well, is this going to be something I want to short right away? In other words, if this thing opens and starts flying lower, should I jump after it lower? Yes or no? I know some of you may or may not be day trading, whatever, but the chart's a chart. Would you want to make sure you got this if it went lower? Do you think the odds are such that you would want to jump on this chart so you wouldn't miss it? Is what we're really talking. Is that what we're really talking about, right? When something opens, the question is, do you want to get on it and not miss it, or are you saying, let me wait even if I miss it? Are you willing to miss that, right? So we got some yeses, we have some nos. And I'm going to have a definite, absolute answer for you in just a second here. I don't want to get into it right now, but the pre-market chart is worthless. I don't look at pre-market charts. They are worthless. I have proven that for years to myself. Take a good look at them. They don't help you whatsoever. End of story. I will not have a discussion about it. If you want to talk about it some other time, feel free. They do not help. If they don't work consistently, they don't work, and they don't work consistently for a lot of good reasons. So pre-market chart, I didn't even look at, and I really don't know what it was, and I really don't care. So if you decided to short it right away, it would have come back on you because it rallied, right? So here we go, and now the chart comes back, and now we have a much better setup because now we would short the gap fill. Is that correct, everybody? Everybody agree with that one on this chart? We would short the gap fill here. Everybody's typing, I don't see any comments coming across. We're getting all waiting for everybody else. Short the gap fill here. Michael, it's funny. The stuff's always on the screen, but nobody looks at it, so you're cheating, actually. Depends on what? No, there's no. Well, I don't know if there was. It depend on. I'm not even asking exactly where. What I'm talking about is just the area. Would this be the area that we should be short? And okay, maybe you get some kind. Let's say let's say in a smaller time frame you had a little, move down, a red bar, whatever that is. Do you like the concept of shorting that area is the question. The little email I sent out today about quick tip number 9 talked about a very esoteric thing, the fact that there is really kind of 2 parts to a trade. Is number 1, what are you trying to do where? Where are you trying to do it? And number 2, what do you need? What kind of a battle do you need to see to convince you to do it? So I'm on the first part of the question. I said we talked about that. Is that the right area? Topping bar. Okay. So I hate to throw stuff back at you, but this is an educational thing, and I want to make a clear statement to you. A topping tail, Raj, is not bearish. Did you realize that? A topping tail is not bearish. And I'm not playing with words, I'm not tricking, I'm not joking, it simply is not bearish. A topping tail on any chart is not bearish. You can discuss that with me by email sometime if you want, but it's simply not bearish. Well, the right answer is that you can't answer the question I asked you. The question is shorting the gap fill a good thing to do here in this case? Is that the area we want to look at? But you're missing a piece of information, and I would really give some extra credit bonus to somebody who would tell me what is the piece of information we're missing. I'll keep dropping hints if we don't get it. What's the piece of information that's missing? All right, Gary, excellent. Yeah, you're saying the larger time frame, but when we're day trading, what is the mother time frame? What is the parent time frame? What is the guide, the absolute supreme thing that you always have to be, I'm going to say, in line with, for lack of a better term? The hourly chart, right? You cannot make this decision. You cannot. 8 times? What's that, Raj? 8 times for what? Say it 8 times, or 8 time frames, or 8 by 5. I'm sorry, I'm not sure what that means. You can keep typing. I'm going to go on, though. You cannot make a decision about what to do right here. You can see my arrow, right? You cannot make a decision without understanding where you are in the bigger landscape of things, right? You're looking only at the trees. You haven't seen the forest. So the chart is missing to make any call on this is the hourly chart. That's what we have to see. Here's the hourly chart. Now, again, this is before the day of the trade, right? So we're going to open. So I didn't put it on there. I missed the arrow. So we're opening somewhere in here. Okay. Now, these little lines that are popping on the screen. What are these things? What are those things? Channels, trend lines. Yeah, you can call them whatever you want, I guess. Let me ask you a question. And I apologize ahead of time for being rude, probably, because I'll probably end up being rude here in a minute. But when you draw these lines, whatever you want to call them, channels, trend lines, should I draw them to include the topping tails, or should we just draw them to the body of the bar? And if the tops don't line up, should I use the most recent ones or go back in time? First of all, should I use the tails or the bodies? The body? Why the body instead of the tail? I've often wondered that myself. Okay. Body, tail, body, tail, body, tail. Closes. But why the close instead of the tail? Can somebody answer it for me? I'm just curious what your thinking is. If you're saying to use the body or the close rather than the tail, why is that? Tails don't matter? It's a different color? Yeah, doesn't the tail show real trades? It's not like the tail is some fictitious thing, right? Well, why do you want to eliminate those runs? Aren't those runs actually the inflection points that are the most critical things you want to know about? I'm just having fun bantering around here for a minute because I've heard people say, oh, you shouldn't use it. That's kind of a silly thing to not use the tail. The tail is the most important thing, right? That says where the actual turning point was, right? Yeah. But here's the real answer to the question, right? If you are even having this debate with me, you're in the wrong ballpark. Only one person said it up there. It just doesn't matter. Doesn't matter. None of this crap matters. If you think that you're going to have accuracy by drawing lines on a chart and that's what's going to work, it doesn't work. That's why I don't care at all. That's why usually when I'm showing lines on charts, I usually make them pretty thick to try and imply these are just broad areas. See, all I want to get out of these lines, if you think that you're going to hit this line and you're going to short that or that's going to hold or that's going to work, that's not it at all. What this line can show you is, as part of tonight's discussion, is the broad area, in other words, the general area. What all I get from these lines are the same that I get from a moving average. That's why when I ask people about moving averages and I say, do you want to use the 20 or the 20 exponential or the 20 simple? Do you want the 40 or the 50? And the final answer is none of that crap matters. It just doesn't matter. They're there to give you a general indication of what's happening with the price pattern. So what I want to see from this is two things. Number one, that this day kind of was exceptional, right? We had kind of an exceptional move lower. And it means I might expect an exceptional move back. And number two, there is no way that I am shorting unless I'm somewhere in this area. Do you see what I'm saying, everybody? And again, I'm not saying that's a short. I'm not saying you couldn't possibly short beneath that. I'm just saying that you are taking a very low odds trade if after this many days down, you decide to start shorting in here, which is what you would have been doing if you shorted, well, we open here. Does everybody see the point I'm making in here? So when we go back to this prior slide, and I said, hey, would you short that gap fill? And I said, you can't answer that question. Here's why. With us opening down here, the gap fill is here. And do you see where we are in the bigger picture? There is no way you short that gap fill. Is that clear? And I'm not here teaching any very technical exact strategy or concept. I'm just giving you an overview of what that little blurb said that I sent out an email, which was, hey, you need the area and then you need to find what you want to do in that area. And we're not in the area there, right? Now, is it possible that on the gap fill it could have fallen? Is that possible? And this is an important question for tonight's whole topic, really. Is it possible that it could have fallen from there? Yeah, sure, it's possible. But the problem is that so many traders then will look at that chart and say, oh my gosh, what do I have to do next time? What do you mean by a breakout? Yeah, right. And next time it teaches them, oh my gosh, I don't want to miss that. So when you have that 1 in 10 chart or whatever that does something flukish and you say, oh, I missed it, then you change your whole trading style to say, oh, I better make sure I get in there, right? Well, yeah, Richard, you're using maybe different language than me, but there's no such concept as a break down below a trend line, a breakout above a trend line. I mean, I don't use those terms that way. It's just, a breakout or breakdown is a specific type strategy to me, at least a DTS breakout or breakdown. Because going below that trend line is just a meaningless thing to me at that point when it does that. Remember, your job is not to try and look at any chart, any move, and say, I have to capture that. That's not your job. Your job is to look at the chart and say, hey, you know what, that's a very low odds thing going on there, right? So when we came back for the gap fill, that was a no-go. Now, this trade, like so many trades, this wasn't a favorite trade of mine. I mean, a lot of times in the morning, there's 2 or 3 things that are the favorites, and they're kind of in the category, boy, I'm going to keep an eye on these. I really don't want to miss these. This was not that. This is a stock that had gapped down in a very bearish pattern. And I thought, well, keep it on the screen, and if it rallies back some way, sometime we'll take a look at it. So here's the 5-minute chart. I asked you about the gap fill right there. And now we're looking at the rest of the chart. So you can see the gap fill would not have made you any money. I mean, to me, don't tell me that's a trade. If you're a micro scalper of some kind, that's still the wrong thing to do because the bigger movement was not going lower at that moment, right? Yeah, all oils were down doesn't mean anything to me because that's a past tense statement, right? Everything was down. I mean, yes, in the morning things are down, but if you are in an area of support or a buy setup, whatever it is, everything that's down at 10 o'clock may be the best buy in the world. So just it's up or it's down is not a relevant part in my consideration of what I want to do. It's the pattern, right? We know that. It's the pattern that we care about. So we come back, ba-boom, ba-boom, and the question still was, even if you look at the hourly chart, this is still a questionable area. Now, quite honestly, this was tempting. If I would have done it there, I probably still would have had the trade the way I would have done it. But it would have been not a great thing. I had at some point decided, we're up here and still looking at the hourly chart. A lot of times you look at these and you're not sure. You're saying, okay, I just want to rally back. And remember, my guide on this rally back is this, right? When are we going to get, like in this, we're gapping down to here, when are we going to get back to this general area somewhere? Just that general area somewhere. So you can see even at the high there, we were still under 51. Let's go back to that hourly chart. Even at the high, we were right here at the high, which is just about where you want to be. So it's when we get to there that it starts getting interesting. Now, that begs another question. It's not only, you set this chart aside and you say, okay, here's the area I'm looking at. But it's not just an area. In other words, if somebody were to ask me at open and say, Paul, would you short it if it got to 50.80? What would my answer be? Stephen, you have like one of the best answers, period. Yeah. Right, David. I wouldn't know because it's not just, there's an area I want to arrive at, but it's a lot of things. It's how did I get there? You can get there in a very bullish manner. You can get there in a more bearish manner. You also have to consider other things, like the time of the day, the market relative strength or weakness, which is, with oil, it wouldn't be the market per se, but maybe it's oil or the oil sector in general. But all these things come together to decide when you have a trade. So it all has to pull together at the right time. Well, what about the fact that we just, where's Richard? We just broke out, Richard, to a new high. We just broke out to a new high. Can you short a new breakout to a new high? What do you think about that? We're shorting a new breakout to a new high. Would you call that a breakout? And certainly this is more of a breakout than the trend line break. How can you short a breakout? That sounds excellent art. Excellent art. Going to new highs is not necessarily a buyable event. It's not a bullish event necessarily. It depends. Sometimes going to a new high is exactly what gets sold. One of the keys that I teach is, and I don't want to get too in depth here, but I mean it's a very simple concept, is that for every chart pattern you're looking at, what I consider to be teaching the language of charts, in other words, how to read a chart, which is what I do here. Every chart pattern you look at, you have to consider 4 groups of people. And as number 1 is who would want to be long this pattern, who's bullish on it, who would want to buy this as a long. Number 2, who has to buy this? Who has to buy it because they're short? Next is who would want to sell it up here. Number 3, who has to sell it up here? Those are all the things you have to look at. And the issue here, of course, goes back to the main time frame, the hourly chart. This is the time frame that matters. This is what we're doing here. That's where we landed, and we landed right here. Big time frame wins. So that little breakout on the 5-minute chart was not a buyable type breakout. It was a move into a sellable area on the hourly chart. Big time frame wins. Look, you have all these days of pounding here going against a 5-minute chart rally. Why did the 5-minute chart come back that strong? Well, I explained that. It's because the hourly chart on that day, the day before, it made an extra move lower. You could argue that that was a questionable trade even up there, because after that many days down, to kind of accelerate the move down, oftentimes you do set a low, and it's possible that maybe it's not going to make a new low. But since I was shorting the top, I have this funny saying I like to say, which is if you short the high of the day, you can't lose money. I know it's kind of tongue-in-cheek, and maybe sounds kind of funny, but it's true, right? If you short the low of the day, if you short the high of the day, you can't lose money. If you short the low of the day, you can't lose money. If you buy the low of the day, you can't. I have a hard time saying that. You can't lose money, right? Well, I didn't really wait for the retest of the top. I took a pattern inside of here because to me that was it. Because notice what you got here. You had this little acceleration going in here on like on a 1-2 minute chart. And after that much of a move up, into the right area in the 60-minute chart, that's where everything comes together. I'm in the right area on the 60. What's happening here? Well, what's happening here was we had a little exhaustion move. And then I didn't short up in here, but I shorted here on a secondary sign of weakness coming off the retest of that high up in there. I call it, I think, a retest and failure on a secondary sign of weakness. Now, what happened after that, of course, that's just lucky. I mean, that's just luck. Yeah. Well, thanks, Bradley. But I mean, the drop is just luck, right? You all agree to that? I mean, all you can do, I mean, luck is partly being putting yourself in the right place with some skills. You get in at the right place, you short the high, and then you do it. Now, here's a tough question for some of you too. Some of you in the room would know this. This was certainly an area to deal with, right? And look at that bounce in here. I didn't take any money until, where are the arrows? There. Why didn't I take some profit there? Two answers. Why didn't I take some profit there? That was about a 1.5 hour move. That's a good move. I mean, 1.5 hours in an hour? That's over a day's profit in an hour. I mean, why not take some off the table there? Two reasons, and Gary has number one. I wasn't sitting there. I wasn't sitting there. I wasn't sitting there. I left. I was gone. Right, Art? I came back. Art was in the room. I came back and right, I typed in. I said, hey. I said, what did I say? Hey, cool. Hey, wow. I said, boom. I said whatever I said. Because I came back and walked in right around here, or right around 1:30, and said, wow, look at that. Cool. Now, I wouldn't have walked away probably if I thought that this would hold. But the other, I said there's two answers. One, I wasn't there. But why wasn't I there? Because the hourly chart rules, right? The hourly chart rules. Is it possible that this could have held and it would have gone sideways? Yeah, it could have. We don't know these things. But you get a good entry. You try and get the most you can out of it. So this is what. So getting back to tonight's topic, knowing when to wait. I mean, look at how many potentially stopped out trades you would have had, right? You could have shorted the open, you could have shorted the gap fill, you could have shorted that prior high, you could have shorted the retest and failure, which may or may not work. I mean, there are potentially 4 entries if you were all after this short. And the thing I hear so much is, well, the stock is weak, and oils are weak, and you have to short it. But timing is everything, right? I mean, you can't just short anywhere, anytime, because then you have one of two problems. Either you're giving things so much room that you are not making money on the drop, or you're going past your stop by such an increment that you're going to eventually blow up your account. That's guaranteed, right? So we have to be better than that and get the right general areas on this. Questions on that? And then I'm going to continue. So that was the first half of this, the first part of this, which is to say, and again, this is just one example, but every chart you look at, you have to make a determination to say, all right, where is the buyable area? Where is the shortable area? I don't care if you're on a daily chart, an hourly chart, on a gap trade, whatever it is, there is an area that you want to see. And then when you get there, you want to see something happen to it. And you have to see how it gets there also. So it's not waiting, it's knowing when to wait. That's the technical part. That's what we just discussed, right? I knew to wait. Now, do I always know to wait? Of course not. I get things wrong. I get things wrong because sometimes I'm too anxious and I get in too soon. I get things wrong because sometimes I say I'm waiting for that and then I miss it. Here's one big difference, though, that maybe I have that maybe a lot of you don't have, especially if you're newer, is that when I miss a trade because I made the decision that it was not appropriate to take it there, how do I feel? If I miss a trade because I made the decision that it wasn't appropriate there, I could care less. I could care less. I don't sit there and go, woulda, shoulda, coulda, oh my gosh, that one got away, oh my God, I wish I would have done that. No. Now, I will occasionally complain about missing something, but trade I missed is something that I decided I wanted to do, and I was going to do it, and I tried to do it, and it was too thin, I fumbled, I was doing another stock. I'll complain about that, but I think it's a very almost immature thing to complain about something that you weren't ever going to do, right? You can look at the screen all day long and say woulda, coulda, shoulda. By the way, that's one of the quick tips if you go back and look. Every trader has a whole pile of woulda, coulda, shouldas. Just forget about those. You only make money from your good trades, not from the ones you could have done, right? So knowing when to wait, that's the technical part. It's the actual waiting that is the psychological part, right? The actual waiting. After you weigh the odds, you may jump in anyhow. Why would you jump in anyhow? Why would you look at a trade? Like, go back to that gap down. Why would you look at a trade and say, okay, I'm going to wait for it to rally until here? And then when it starts to fall, why would you just jump into it? Anybody ever done that? Anybody ever say, here's where it's opening, I'm going to wait for it to go to here, and it starts doing this. And you jump in it. Anybody ever done that? Yeah, everybody has. I've done it too. Well, why do we do that? Well, if I decided to let it rally, I don't do that very often. That's pretty rare for me. But why do a lot of traders do that all the time? Yeah, that's the other half of the equation, the fear of missing out, because they're thinking, oh my gosh, that trade yesterday, I passed it. And this is where you get these bad habits, right? That trade yesterday, I didn't take it, and it fell like a rock. That's not going to happen to me again. Well, listen to what that's saying. Listen to what that trader's saying, right? The trade yesterday fell like a rock. I'm not going to miss it again, so I'm going to jump on this one. What's lacking from that conversation the trader's having with themselves? What's lacking? Yeah, well, Mark, the way I would have phrased it, you're right, but any technical discussion about what you're looking at, right? The trader's not saying, oh, well, this chart is this and this and this, and that chart is that and that and that, right? They're not saying that. They're just saying psychologically, oh, I don't want to miss things. But do you know how much this rules for most traders? Why do 90% of traders fail? And I don't know if that's the number. I make that up. I mean, it's the number I hear. I have no idea how you even know. But why do so many people struggle? It's because of these types of things. Because, number one, they don't know when they should wait or not. So that's the big deal to me. So many, and I've harped on this a lot this last year, is that so many psychological issues stem from a lack of technical understanding. Does that make sense to everybody? Does that make sense? Do you agree with that totally? That a lot of psychological issues stem from just not knowing what you're doing technically. Because if you don't know, you never feel good about it. You have no confidence, right? Without confidence, how can you possibly make decisions on what you're doing? How can you say, yes, I need to wait on that, and I don't care if I miss it, right? As soon as you say, oh, I don't want to miss that, and it's not because of the chart, it's because of your fear of missing it, you're not going to make it in trading, period. You're not going to make it. You'll have your winning trades, you'll have your great days, you'll have your moments, but you're not going to be around 6 months from now. It's just the way it is. I'm sorry, but somebody has to tell you that. And I'd rather tell you that and get you mad at me than to have you not understand that and fail eventually, right? That comes from FOMO, fear of missing out. That's the psychological part. It's that gambling mentality. It's that need to be entertained. It's everything but running a business mentally, right? All those things are FOMO. The psychological part often occurs simply because of a lack of knowledge, a lack of confidence. If you are not sure of what to do in the market, you don't have high confidence in your trades, you'll always find you may miss a trade, right? Because now anything that drops or rallies is a miss to you. By the way, this presentation is focusing on waiting for proper entries, but the same discussion applies to waiting for proper targets. How many people have the same issue with targets, right? I'm talking about entries here, right? But how many people have this issue with targets? It's even more of an issue because it's more of an, can anybody tell me why getting to targets is more of an issue than waiting for entries? Waiting for a target is more of an issue, a bigger psychological problem for people than waiting for entries. Why is that? This will be recorded on the free stuff page within the week, Bradley. I'm sure you're familiar with the free stuff page, right? Right, exactly. The problem with targets is that you start to move to a target and you're green, right? And then it backs up on you, and you're giving back profits. You're saying, "Oh no, it's going to go red. I'm going to be a loser. I'm going to make sure that I'm a winner. You can't go broke taking a profit, so I'm just going to lock this in here." And that's what everybody does because they have fear of being a loser. At least with missing a trade, the fear is missing future profits, right? And that's less of a stress on people than it is to be giving up current profits, correct? That's why it's tough. That's why getting to targets is tough. And that's why traders who don't understand management of targets and management of entries and management of stops will have a very hard time making it. In unjust fear, let's talk about this part now. The unjust fear of missing out. I said that unjust is critical in that definition. Unjust is critical in that definition. Otherwise, it would imply you should always wait because you can never miss out, right? That's simply not true. There are times you need to be aggressive. Knowing when these times are relies on your technical expertise. Actually acting at that time relies on your confidence and psychological mastery. Acting at the correct time. So we talked before about understanding the chart and saying I need to wait, otherwise you're going to be riddled with bad trades and stop outs. Here we're saying there are times where you need to act. So you can't have a constant fear of missing out, but you should not have an unjust fear of missing out. It kind of brings in that saying that missed money is better than lost money. And that's a saying I don't necessarily agree with. Of course, you don't want to take poor trades. I'm assuming that we're all going to take the best of the best trades that we know we could find. But I don't think it's okay to pass good trades for the wrong reason, because as a professional trader, you make your money from your good trades. And it's not okay to me to give up a half a week's profit on a trade because you're afraid it might be a loser. I mean, you can't make that decision at that time. You take the trades you're supposed to. So that's what that word unjust means to me, is that, how do I phrase it the other way? The fearing missing out is a bad thing, but only if it's an unjust fear. Because if you know the chart, here we go, and if you know it's going to happen, and it's going to happen right here and or it's going to happen quickly, then you have to have the knowledge and understanding and the psychology to say, hey, I'm getting in here, right? There are a lot of times that I'm a long-term trader. I have a long-term trader letter that does well, and I'm also a day trader. And as a day trader, I focus on the opening hour to 90 minutes. I like very much the opening 5 minutes, the opening minute. There are times that I'm entering a trade the opening minute of the day. If you're doing that, guess what? You have a lot of confidence that that stock's going to move in that direction at that time. I do that all the time. I did not have, in the last 2 weeks, I went back and looked for this presentation, I had no full winner or loser from a trade I took the opening minutes. They were all just partial winner, partial loser, or it wasn't the type of environment things were moving at the open. It's been too all over the place. This is the closest one I had. And the only negative about this was it was the trade of the week, but it's a good example. And this was entered 3 or 4 minutes into the trading day, so that's awfully quick. And it brings up the same issue, which is how do you react? When do you wait? When do you not wait? Well, it's all based on your chart knowledge, first of all. And then second of all, when you decide what to do, you have to do it. So on this trade here, we're going to open with a little bit of a gap down, kind of similar to DVN, right? We have a little bit of a gap down. But do you see the complete difference in this hourly chart, everybody? Do you see the complete difference compared to the DVN chart? Remember the DVN, we were accelerating down and we gapped down from an accelerated pattern lower. If you just looked at moving averages, if you remember on the DVN chart, we were already kind of well below the 20 when we're talking about shorting things, which is not the right spot to do it. So there's a big weight. If DVN went lower at the open, I could have cared less. I never would have said, oh, I missed it, right? And even after waiting, it was still like, okay, boy, I'm glad I waited for that very last move because that turned out to be perfect. Here, this is a different story. Here we have a daily chart that is just rolled over. And now this bar here includes the day of the trade, so it is the day of the trade. So at open that day, we had that one red bar, which if you look at this overall daily chart, do you think on a scale of 1 to 10, how bearish would you call this daily chart right there before we open that day, right? Or right at the end of that small red bar, but before. How bearish would you call this daily chart, scale of 1 to 10? 10 being very bearish, 5 being in between, and 0 being it's bullish. Just a quick little chart grading lesson here. 0 means you're bullish on it. Okay, let me show you the things I'm looking at. Biggest red bar on the chart in a year on a gap up igniting a move lower. Does that mean anything to anybody? The run caused by that breaking through key support area. I know you're not seeing the whole chart, but that's all you need to see. Rally back right into the key resistance area and then a gap down under the prior day's green bar. I'm sorry, I'm at like a 9 on that, right? I mean, that's excellent, right? Excellent. Yeah. So everything there already as the daily chart, the bigger time frame. Now, I'm not going to get into the discussion because it's getting too technical here for the webinar event, but there are things I require from the daily chart. Obviously, having the daily chart super bearish is not going to hurt this trade if I'm short. Hourly chart here, this is the first move down that day, and then we have somewhat of a consolidation the next day. When you have a non-extended move and you have consolidation, those are the indications that you want to start acting quicker if you're thinking of shorting. So there's what it did that day after the trade. Here's the 5-minute chart. This thing rallied for 3.5 minutes. 3.5 minutes. Now, in this particular case, much different than the last trade. This particular case, when you get that rally, hey, I'm all about that. So I shorted that rally. I ended up, actually, it wasn't the greatest entry in the world. It was under 41, under 40.95, and it's only because it moved so quick when it started to move down, and stop over 41.41. So if you see, actually, this could have made twice the money if I would have decided to go on tighter with the stop. I really gave that stop about twice the amount I needed to, just in case it was going to goof around, and because sometimes you can add to it, but in this case it dropped like a rock. I really couldn't do that. So literally shorting that little topping tail up in there. And some of you may be saying, well, what did you use to enter? There's not even a sell set up here, quote unquote. It's kind of beyond the scope of the conversation. Again, what we're looking at here is knowing when to wait, when to act quickly. This is a trade where everything said act quickly. This is my fave that morning. Had it on the screen, was looking at it, was in the category, quote unquote, wasn't going to miss it. I have a question. Any questions so far? I have a question for you on this chart here. Oh, and then, so I took targets on this as it hit the low of the day in that case, because it was a very good move, and then great second target. I mean, to me, that was great. It accelerated right into 10:30 reversal time. I got it right off the low down there. Couldn't have been any happier with that. The fact it went lower later, don't care, could care less. Why? Because at the time that hit the low, look at that bar. I mean, I already had one of the biggest red bars in the daily chart, and now what are you looking at? You're looking at maybe you get an extra 20 cents, and on the other hand, maybe you give back your whole trade. That's where you have to do that weighing of, how do you want to take your money? But that was a no-brainer down there for that one. But let me ask you this question, something that maybe some of you are thinking, and you don't want to ask because maybe you think it's a stupid question. The stock opened here, right? This was my favorite thing I said, right? And it rallied back, and I got short, and what a great trade, right? Bradley, anything at DTS that I ever talk about, and anytime you talk about anything, it's all Eastern time. Why? 2 reasons. Number one, the market is in Eastern time, so that's the rules. Number 2, I'm in Florida, so I'm Eastern time. So if I'm Eastern time and the market is Eastern time, all of you need to adjust, because you could be there's somebody here from Australia right now, there's somebody here from all over the world. So we have to talk at the same time. So we're always talking Eastern time. Market opens 9:30 to 4. So here's a question for you. You're probably sitting there, wow, okay, Paul, you sat there, you waited, but how did you know it was going to rally, Paul? What if it opened and dropped like a rock? Would you have been in this one? How did I know it was going to rally? How did I know it was going to rally and I get short up there over 41 somewhere? How did I know that? I didn't. You're right. I didn't know that, because, like I said, I could never know that. I can't know it, right? What about if it dropped then? What if it rallied only, how much did it rally? Like 40 cents, 50 cents? What if it rallied 10 cents and dropped? What if it rallied 20 cents and dropped? What if it rallied 30 cents and dropped? What if it went sideways and dropped? What if it just dropped? What if it just opened and dropped? Which one of those would I have been in? I'm asking that question for 2 real purposes. Number 1 is to make the point that at the time we opened, I knew the answer to all those questions. Do you believe that? Do you believe that? You should. That's right, Mark, exactly, right? You've heard me say, I'm sure, if you've listened to more than a couple of events, is that whenever you're looking at a stock, whatever it is, that you have to let it do what you want it to do. You don't follow the stock around. The stock doesn't drag you around by the nose. You say to the stock, here's what you need to do, and then I'll go long, I'll go short. So every one of those scenarios, theoretically, I have covered what I'm going to do, how I'm going to handle it. Do you believe that? My favorite, you people in the room, in the morning, my 3 or 4 favorites, do we not sit there and say, here's where I'm looking to get long, get short, right? The language you use in the room sometimes is, right, I'll take the pop and drop, I'll chase it, right? That's some of the translated language I use in the room. You seminar students know the more extended version of the language, but right? So you know what I'm looking to do. And yes, I know exactly what I plan on doing for any little move that happens. And here's the second point I wanted to make. As I say this, this is not training per se on the chart or how to handle this. This is training about what you need to know in general. When we open here, right, I would have one concept. It's possible on many trades that I would be willing to short if it went lower immediately, right? It would be a different type entry if we rallied a little bit. I would have a certain entry concept if we rallied a certain amount. And then when we rally beyond that point, I'd switch to a different concept, a different entry, different stop scenario. And if we rally some more, I'd go to a different, if we rally a little bit more, I'd go to an even different entry stop scenario. In other words, different entry type concepts. That discussion about getting in my head, so to speak, I did actually 2 full-hour presentations for the seminar students, and they're called Practical Application Review Days, and they're recorded and they went into the home study program. And I walked through exactly that process to say, look, here's a chart, you're not sure where it's going to go. You're willing to take it short initially, it drops, blah, blah, blah. How do you handle it when it rallies? When do you switch from one entry to the next, right? Some of you will listen to that in the home study, I assume. I bet you April has, because she's a very diligent student and has gone through that probably. It's in the entry section of the PARD. And, you know, to me, that's the great type of discussion you need to have to make money in the market. It's a discussion that most people will never hear because they just don't get that into technical analysis. It's just kind of more of a, oh, gee, I think it's lower, I think it's higher, and oh, it gapped down, it's got to go lower. It's tough to trade that way without the precision that you have by understanding charts really well. It is a balancing act, is the bottom line of all this, everybody, right? It's a balancing act. Having patience means acting at the right moment. And that can mean patience to wait 15 seconds, or it can mean patience to wait 5 minutes, an hour, or 2 days. You have to know the chart to know what it is you need to wait for. Advantages of acting quickly when the chart calls for it. Well, you will not miss the move, right? If you're going to act quickly and you're looking at the stock and saying, okay, this is not going to get away from me if it moves higher or lower, whatever I'm doing, long or short, if you're saying I'm not going to let this get away from me, then acting quickly will assure you have the move. You will have the best entry if you're correct, right? If you're going to act quickly, you're going to have an early entry. It'll give you the best reward to risk, which will give you the most profit. And it's the easiest job of managing if you're right. Now, why do I say that? Well, if the last trade was a short, so let's talk about a short. If the stock starts to drop and you get in at the moment of inception, boom, and then it drops, and then it goofs around here for a while before going lower. You are green the entire time. Do you know what I mean by that? Your little money counter says plus $100, $200, $500, $800, $1,000, right? You're plus money. If you decide to short very quickly at the same area, but the stock sucks you in and then goes higher and sits there, you're not stopped out, but it goes higher. And now you're down half of your risk amount. When is it easier to manage a trade? When you're plus half an R, if you're risking $1,000, is it easier to manage if you're plus $400 or if you're minus $400? When's it easier to manage, when you're plus or minus money? Yeah, plus by a lot, right? Because when you're minus, what are you always thinking? When you're down instantly, what does your mind instantly start thinking if you're an inexperienced trader? How to do what? Yeah, I want out. How to minimize the loss, right? That's the favorite thing, right? How to minimize the loss is everybody's favorite words. And as I've said many times, I have nothing against minimizing a loss if that's the appropriate thing to do. But if your goal in trading is to minimize losses, guess what you will end up with? A whole string of minimized losses. And that's not profit. So there's the advantages of acting quickly. The advantages of waiting. Every bar that forms, weekly, daily, hourly, minute, doesn't matter what bar, gives you more information to make better decisions, right? The more bars we see form, above us, beneath us, whatever it is, the more we learn about the price pattern, the more we learn about the battles between the bulls and the bears, so we can make better decisions, right? So accuracy improves as a result of this. Now, what are the negatives of waiting? Well, the negatives of waiting, of course, are the advantages of, the opposite of the advantage of acting quickly. If you wait, you may never get it, right? You may wait for it to get to a certain area, it doesn't do it, and you miss the trade, right? Is that good or bad to miss the trade? Well, it depends. It depends what you decided to do. Which is better? It's a balancing act. Which is better? And this is making more money per trade, money, or accuracy, your batting average, right? The more you wait, the more likely you're going to have a higher batting average, but the more likely you're going to make less money. The more aggressive you are, the more you say, hey, I'm going to get in this quickly, your winning trades are going to make more money by definition, but you're going to have probably more stops. Now, how many stops you have depends on how good of a trader you are, how accurate you are at reading all of that good stuff, right? But, and it says a balance, it is simply a balancing act. Neither fast entries or slow entries, neither making more money with a lower batting average or higher batting average, less money, neither is better in a vacuum. But, and here's the big but, you are not in a vacuum, right? You know when to wait by having superior technical understanding. And you have the ability to wait when you should through confidence and experience, which gives you a mastery of your psychology. Boy, that's a great slide. I didn't know it was that good. Look at that slide. I have to read that again. You are not in a vacuum. You know when to wait by having superior technical understanding. And you have the ability to wait when you should through confidence and experience, which gives you a mastery of your psychology. You should take a picture of that slide there and hang it next to your monitor. I should do that too. That's really a good slide. If this helps, cool, thanks Bradley. If this helps, this is something I've actually mentioned to seminar students when I'm teaching because I found this is something that helps me. No matter how good you are, no matter how much you look at charts, no matter how confident psychology you are, whatever it is, there's always going to be a borderline trade, right? There's always going to be that trade where you say, man, I don't want to miss this, but boy, I'm going to feel kind of stupid if I stop out. Here's what I ask myself sometimes, and this may or may not help you. This may seem silly to you, but this actually helps me. You ready for this? Here's the trade. If I enter it now and I stop out, how mad will I be? Sit there and digest that. How mad? It stopped out. Darn it. How mad will I be? If I don't enter it and I miss the trade and it turns out to be the trade of the week, how mad will I be? Measure those amounts. It's actually, to me, a very helpful concept. Are there any questions? Just want to make everybody aware, a little email went out. There's going to be a little price increase in the seminar program starting the Friday of the next seminar. So you have all until the next live seminars to enroll if you want to. And I will take your questions here. So let me go back and read a couple things here. Hall of Fame material, thank you, Mark. Should you be indifferent and not be emotional? Absolutely, Richard. Yeah, I mean, that's the hallmark of a good trader is to not be emotional. We joke around in the room, we call it boom, when we have a good trade, but it should not be the case you're high-fiving and all excited when you get a good trade. It should not be the case that you're throwing your monitor out the window when you get a bad trade. It should be a business to you, Richard. It should just be a business, right? Part of your business is you're going to have some winners, you're going to have some losers, right? As a salesperson, it's a business, right? Every 23rd person, I'm going to get a sale, right? You don't slam the phone down 22 times in a row, right? You just say, hey, every person who says no brings me one closer to that yes. Now, hopefully in trading, you're getting more than 1 to 23 right, but you get the idea, right? Thanks, Bradley. Thanks, Mark. A lot of gemstones. Which slide do you want to take? Oh, this slide here. There you go. Take a pic. And this will be out on, within a week typically. It'll come out on the free stuff page, and you can listen to it again. Grateful. Thanks, Doug. Thanks, Raj. All right, there you go. Take your picture. All right, any questions? You guys do okay today, Art? I had fun today. I didn't. You guys had fun today? You make some money? Good. Looks like we're done. Thanks, everybody. We will see you. Well, I'll see you at that event on that Friday, I guess. That's the next thing coming up. Have a good one, everybody. If you're in the room, we'll see you in the morning. And if you're in class, we'll see you Saturday for Mastering Gaps, right? Otherwise, we'll see you guys at the next event. Take care. Have a great evening.